Good morning, ladies and gentlemen. We've a minute or so past the appointed time for our 2013 Christmas webinar. I welcome you all. I thank you for being with us, having been with us during the year and being with us now. And I've got some interesting things to show you. I want to talk to you today about a variety of things. I want to talk to you about trading, and I want to talk to you about wealth. It just occurred to me that we've now finished our sixth year of presenting the Danielcode to the public. I, of course, have been using it for, parts of 25, 26 years. And I know that a lot of you are not trading or just trading in a desultory fashion. The purpose of this thing really, to strip it of all its finesse, is to make you rich. And I don't know how many of you are actually getting rich from the Danielcode, but I suspect not nearly enough. Let me just check with Terry if you can hear me all right. Or any of you, if you could just let me know how the volume is. Make sure you can hear this, or we're all wasting our time. Can't hear anything. Okay, let's start again.
The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, or good morning if you're in other parts of the world. My name is John Needham. As usual, I'll be your host for today. And we're about 4 minutes past starting time, for which I apologize, but it's given a few more of you a chance to get into the room for this. So welcome, compliments of the season, happy Christmas as we enter the festive season. I've got a lot of stuff to talk to you about today. Some of it's on very specific trading stuff, others on where the markets are going to be next year. Going to be a very, very exciting year, 2014, as they all are, but I think next year will be particularly exciting because I think we're going to have some major corrections in some big markets. I also want to talk to you sort of philosophically, but very briefly, because it came to mind a few moments ago that we've now finished our sixth year of presenting the Danielcode publicly. And the purpose of the Danielcode, stripped of everything else, is to make you people very wealthy. And I'm not sure that you all are very wealthy, and I'm not sure that all of you are trading in a determined manner. And I want to just go through and show you briefly how much money this program makes. I guess it's my personality. I tend to focus on things of interest instead of talking more about the basics of what trading is all about. And as I say, stripped of all its finesse and glamour and everything else, the purpose of trading is to make you people very wealthy. For those of you that haven't met me, I'm a attorney, I'm elderly, I'm past retirement age, and I've been doing this for well over 30 years, and I've seen a lot of the world, and I have to tell you that I know of nothing that can make you so much money so quickly that is legal. And if you're not getting bags and bags of money out of the Danielcode, you're missing a great opportunity. So I've got a little webinar to show you today, and a little PowerPoint rather, just to highlight some interesting facts and to take us into the webinar. And of course we'll be taking questions at the end. Bo, hi my friend, nice to see you here. We've got some guys from the tutorial here, and Darryl Coors here, a few others I see. So welcome to all of you. Welcome to my old friends. River Sam, I see you're here. A voice from the past, mate. I haven't heard from you for a long time. Anyway, all the best to your family, Sam, and all our friends up in Aspen there. Of course, where you are, it's cold and dreary in winter. I know you love that because you're a champion skier, but I have to tell you, down here at the Gold Coast, which is an hour south of Brisbane in Queensland, Australia, we just have hundreds of miles of golden sand beaches. The Pacific Ocean today It's so incredibly blue. It's unbelievable. Lovely little bit of white surf, nothing too big, just enough to keep the kids on the boards happy. And it's a beautiful day. Of course, it's also Friday down here. We're many hours in front of you, most of whom of you live in Europe and mainly the US. It's actually Friday morning at 11:37 down here, so I'm almost onto my Christmas break and really looking forward to it. Anyway, let's just run through the webinar PowerPoint that I've presented to you so that I have some semblance of keeping on track, which you know I don't always do. We've talked about some of this stuff before, and for those of you who are not familiar with the Danielcode, it's a mathematical matrix that controls all markets in all time frames, and when you look at markets through the prism of the Danielcode, they are almost entirely rational, orderly, and sometimes predictable, and we hope that you're going to see that as we go through this webinar. We're primarily 1 to 8 day traders. Most of our trades are sort of 1 to 5 days really. We trade 15 futures and 16 forex pairs, and the reason for that is that the big money in trading is only made when volatility comes into the market, and as I can't yet forecast volatility, future volatility, and you can take it as read if I can't do it, nor can anyone else. Hey Sam. Then the way we grab that is we trade a whole lot of markets, so that when volatility does come into the market, we're in the middle of it and making money. That's a very different approach to most people who will tend to trade 1, 2, or 3 markets. And as Mary said to me at Waiheke, for those of you who missed the tutorial, guys, you missed out on something really special. Waiheke Island in the Hauraki Gulf of New Zealand was just beautiful. But she said, you know, if you're just trading 1 or 2 markets, you're waiting for that big spurt of volatility, and it might come once a year. And that's why we trade a lot of markets, because the whole nature of this business is that we're here to capture volatility. And the only way you can do that is by being in the markets. The chart you're looking at now, I don't think it's changed for you yet. Just bear with me while I see whether you've got it yet. It's changed now. Is one of our special Danielcode trading channels. If you don't know how to construct these, please go to the videos tab above the Danielcode, top of the Danielcode website, and learn how to create these trading channels. They're very, very special, and as you can see, this is the S&P. This is the index. The fact it's got a dollar before the symbol tells you it's the index. And this is the whole run from March 2009. The slightly darker, heavier blue line in the center of these 4 parallel lines is the mean or the median. And then as you go up the page, the first blue line is 1 standard deviation from the mean, and the second blue line is 2 standard deviations from the mean, same on the lower side. And these are not normal standard deviations. These are Danielcode standard deviations, which use our proprietary measures. But when you get these things right, and they're lengthy videos at the website showing you how to do it, it's quite extraordinary how these trading channels control markets for years and years and years. And you can see that this market, which is one of our more important markets, has been completely contained and dominated by its Danielcode trading channel since the low in March 2009, and that tells us a great deal about the markets. Let me just get here a tool so I can show you of which I speak. So this is a thing called a spotlight. You should be able to see it any moment now on the chart in front of you, and you can see here that back in early 2010 and again in February, March 2011, this market tested both the 1 standard deviation on the upside, where to go to 1 standard deviation of the downside. 1 standard deviation of the upside, down 2, and that's held that. From there, we've run up here with finding support at the lower 1 standard deviation, broken up through the 1 standard deviation, and now we're way up here. We're up at 2 standard deviations, Danielcode standard deviations from the mean. And markets find it very, very hard to get there, and even harder to stay there. If you look through your charts and you do these Danielcode trading channels, you'll see that gold, which had its huge blow-off not so long ago, actually got to the 3 standard deviations from the mean, and you know what happened then. It goes down and reacts to 3 standard deviations on the downside, because Newton's law tells us every action has an equal and opposite reaction. And we're going to be very close to having a top in the S&P now, and the other equities. We're going to get some corrections, which I'll show you the details more of later, but bear in mind it's not going to be a crash. We're not at some 59 crash cycle, but we are well and truly overdue for a correction, and even a modest correction back to the mean on this chart is going to be about 200 points. And we may get more than that. So we're going to have some real fun in the year going forward. This is the same chart. This is also the S&P, and this is the 12-day chart. We use 6-day and 12-day and 24-day timing charts, and you can see that where that blue oval is, around the 118-day Danielcode time cycle. We've been showing you that now for months and months, and the market has finally got there. So we have this market at a known Danielcode time cycle, twice 59. Remember our rule from the book of Daniel is it shall be for time, times, and then half, and 118 is 2 times 59, the dominant cycle for highs in this market, and indeed most markets. It's got to 2 standard deviations from the mean on the upside, and it's also sitting right at the red line, which is one of the Danielcode 4th seal lines that forecast time and price in advance. It's a very, very sophisticated program, the 4th seal. I dare say the most important discovery in charting of the generation at least, and it forecasts the places in future time and space where price and time in markets will be squared. And what that means is that price will be at a recognized Danielcode number, and time will be at a recognized Danielcode number. And when time and price are squared, a turn becomes almost inevitable. So it's a pretty important chart. This is the chart that's been ruling the S&P since the March lows. I've been continually bullish on this market and telling you don't waste your time reading all the rubbish that's printed by economists and commentators. Only the charts will tell you the truth about markets. Only charts will tell you what is coming in markets, and I'm going to demonstrate that to you shortly. And the rest of it is just entertainment. So if you're reading any of those financial blogs or wanderings of economists, remember that what you're reading is comedy and entertainment. The whole world today is obsessed with entertainment, and that's really what those things are. So, read them, have a good laugh, but don't take it seriously, because only the charts can tell you what is going to be happening in markets. I've just popped up, this is actually an old, this is a year old, this chart, this document I'm showing you, but I want to highlight to you, those of you that haven't yet started trading, how easy we make the trading for you. Our programs, which are all computer generated, create daily buy and sell signals. And we create this document you see here. It's called the Danielcode Trade Program. You can find it at the Danielcode website. And we tell you for every day what markets have buy and sell signals, exactly where to enter, exactly where to put your stop loss, what the first target is if that's appropriate, whether that markets are correlated with other markets, and depending on the size of your contract, which you just type in at the top, and the risk you wish to take, it will suggest to you the number of contracts you can take that will keep you within that defined risk. So you simply bring that up, you type in the number of contracts you want, you press the recalculate button, and it will tell you exactly what your risk is on each trade. So the point is, don't be frightened of this stuff. Those of you who haven't started trading yet, for goodness sake, saddle up, join the Danielcode, get your feet wet. Everyone has to start somewhere. We have some very, very good and sophisticated traders at the Danielcode, and you may sometimes sort of think it's all a bit beyond you, but it's not. And everyone has to start somewhere. For those of you that don't have a big enough bank account to trade all the markets you want to, we've got ways to help you trade smaller markets with smaller dollars, and everybody starts there and builds up. So you know, my New Year's wish for you all is that those of you who have not yet started trading, or who've been trading and given it away for whatever reason, I want to reinvigorate you and urge you to get back into trading, get joined up to the Danielcode. We hold your hand every step of the way, and the only way you're going to become a great trader is to get started at it. And I assure you there is nothing more rewarding than being a successful trader, and once you achieve all of that, you will have financial freedom for the rest of your life, as will your family. You will be working for yourself when and how you wish, and all you need is a comparatively small computer. In fact, if you go and buy just any standard computer, don't put a lot of other crap on it, just leave the Danielcode and Trade Navigator alone on it. It will run all of our programs very satisfactorily. Now, my friend Stephen, who came down from the Philippines to see us at Waiheke and do his first tutorial, put up an interesting post in relation to Wednesday's price action when the US Fed had its last meeting of the year and came up with an announcement that's, excuse me, quite silly, like all these things. Bernanke, on his last day, having started this quantitative easing, which is just a giant scam on the public and savers, felt that he'd like, as his legacy, to go away, having saying he'd started reducing the actions of QE, or as they call it, tapering. And it's an absolute lot of rubbish. They've been buying, the US Fed has been buying $85 billion a month of US government treasury bills, which is a Ponzi if ever I've seen it. I mean, if you tried to do that with a private company, you'd be getting serious investigations into you. It's just one hand buying from the other. But as long as the public is silly enough and gullible enough to accept it, and as long as journalists keep lauding it's a wonderful thing, it will be allowed to go on. But it's a complete scam, and nonetheless, the announcement was, that sent the markets wild on Wednesday, that they were tapering to the extent of $10 billion a month. Well, you know, when you've been buying $85 billion for 4 or 5 years every month, and you're going to taper by 10, I mean, it's a drop in the bucket. It's another slice of, not even another slice of lime in your Bloody Mary. It's a few pips, but the emotional value of it to traders, if they are traders, they're all the short-term traders who think they're going to beat the news, did set off quite a ripple. And I wanted to show you simply, Stephen, those trades that you were worried about, shouldn't have been worried about at all. You should have made an awful lot of money about it. Now, I don't recommend that you trade on these days unless you know what you're doing, because you can get these huge bursts of emotion occasionally, and when they do, you're in a very, very fast market, and you need to know how to handle it. So I just wanted to go through some of those trades you mentioned, and show you what happened and what you should have been doing, and also to let our new people with us see just how simple the Danielcode is. Thanks, Neil. Good title for next year's webinar, starting from a small account. Well, let's make that an early webinar. Everyone should start with a small account. In fact, everyone should just start with a paper trading account and not risk any real money till they get that done. But everyone starts with a small account. I started with a small account. Everyone does. That's how you start. You start small, and if you work hard and pay attention to the Danielcode, you'll get big, and you'll do it a lot faster than you think. Anyway, Back to Steve, your Dow trade. This was the setup you had the day before couple of days before the Fed meeting. This was the last set of the Danielcode members charts that were published. This is the Dow and this is the index. Remember, these markets were all in rollover about that time, so you should, where I provide them, you should be looking at the index or indices as well as the futures contract. So the main thing you should notice here, this is straight from the website. Go to the website and click the charts button, and you'll see all of these charts for a lot of these markets. But you had, the main point there is you had the market at a blue line, a Danielcode blue line, and this is target recognition. The last down bar before the red bar, which was an inside bar, went slightly through the blue line and pulled back, and that's the miracle of this Danielcode. Have a look at our website, folks, and click on Chart Archives. There's 29,000 nearly charts in there that I've drawn them all by hand, and you're really pressed to find one that has not turned at a Danielcode number, or that has turned at anywhere other than the Danielcode number. And if you know that and nothing else, you know a lot more than almost everyone else in the world. So here's this chart setting itself up. It went through the blue line target, pulled back. I mean, these are secret numbers. The world doesn't know these, but Danielcode is the DNA of markets, and markets do this all the time. The very next day, you got a little inside bar, and you see how the bottom of it retested that Danielcode blue line to tell you that it's now got target recognition. And then this is what happened. The next day, you got an absolute standard Danielcode blue line buy signal. And if you look at this chart, you'll see there's a couple of different stochastics on it. A fast stochastic, that's the 533, and a slow stochastic, that's the 14.3, and our proprietary measure of momentum, which is, it's called the CCI. In fact, it's not. The CCI is a very old study. It used to be called the Commodity Channel Index, and the default setting on it's 100 days, and it's supposed to define the channels that commodities move in long term. It doesn't do that either. But I've taken it because I like the math inside it, and I've changed its settings and shortened it up and turned it into a very good momentum indicator. So if you look at this period of the chart just in here, you've got, first of all, you've got target recognition partially on the last black line there of the 16th. Then the inside bar gives you exact target recognition at the blue line. Now, this is all standard Danielcode stuff. It's in the manual. It's as easy as can be for you people who haven't yet started trading. This is how it works. When you join the Danielcode, we'll give you these studies. You'll get the Danielcode stochastics. They're very special because they have a character that no other stochastic has, and that is that they don't calculate inside bars. And inside bars are the destroyer of stochastics and other studies. And these special Danielcode studies ignore an inside bar, and when an inside bar happens, it just gives you instead the average of the last 3 bars, and that gets rid of almost all of the errors in stochastic that inside bars have. But straight from the Danielcode manual, you've got target recognition, you've got the fast stochastic oversold. That means the blue line, the faster of the two, is below the 20% line, which is the horizontal line you see. You've got an oversold condition in the slow stochastic, exactly the same, and you've got divergence in the CCI. Here's the market making new lows for the move, and here's the CCI not making new lows for the move. And that's classic divergence. So that gave you your buy signal right here. You can, if you want to, buy the high of the inside bar. I don't. The way the Danielcode trades inside bars is we buy the high or low of the last bar that was not itself an inside bar. So, Stephen, you got into that trade there. Then you had an inside bar. Now, have a look at the stochastic. It's roaring up. It's opening its jaws. This market's telling you it's about to accelerate. So even if you tried to take a GMAD sell after the inside bar, the point at which that trade is elected is way down here. It's below the last bar that was not itself an inside bar. So the sell was never elected. You should have been long and stayed long. How we use this stochastic here is we use a 2-bar trailing stop. That means that the stop loss goes underneath the lowest low of the last 2 bars that have been completed, or above the highest high of the last 2 bars that have been completed. That never got touched. That stop was down here, and then you got this huge roaring run up on Wednesday and a little bit more on Thursday. So you should have made a lot of money out of that trade. Here's a look now at the E-mini. It's pretty similar. I'm just showing you the same thing again and again. This was right here. This will be back on Monday. It was a standard Danielcode blue line buy. I posted this signal for you. I'm sorry, I didn't post this signal for you. This was in rollover, but it's a standard Danielcode blue line buy from the manual. You got long at the high of the last bar that was not itself an inside bar. Remember, because you were going into rollover, the December contract was ending. The March contract was about to come the front month. You had to execute this trade in the March contract. And you should have been long there. Here's our exactly the same thing, standard Danielcode blue line signal, fast stochastic oversold, so low stochastic oversold, huge divergent on the CCI, buy it. You're long there, you get an inside bar, your stop is below the last completed lowest low of the last 2 bars. It's down here. You get this roaring move up here, and then it ticks back a bit yesterday or today. You made $1,162 on that trade. No dramas, no fuss. Here's the US dollar index, Stephen and others. That was the other one you raised that caused a bit of a fluff. Here you had a G-match sell signal. I didn't put up any signals because it was in rollover, but you had a sell signal and the market roared down. The line you can see down here is the highest high and lowest low of the last 6 days. Now, those of you who've read my articles will know that 6 is the number of all markets. If you haven't read the 2 masterclass articles under the articles tab, you should do so. So that's the equivalent to the lowest low of the last 6 days. And if you look at charts, they don't go very far through that without pulling back or reversing. And if you were trading this and you were short on a Fed day with huge announcement, markets traveling at warp speed, you should have had a trailing stop on. Anytime markets intraday go more than 150% of the average daily range of the last 7 bars, you should have a trailing stop on, because odds are they're going to reverse. And when that reversed, you had to, Stephen, be long at the point of this bar on the Tuesday, which is the point at which the outside bar was created. And that's a mandatory thing in the Danielcode world of trading. You must always take the stop and reverse if an outside bar occurs while you're in a new position. So you got short here. It roared down. If you knew what you were doing, you had a trailing stop, made some money. Then it came back. It's all very disappointing, but the minute it hit this point here to create the outside bar, you had to close your short position and be long. And you lost $850 on the trade, the difference between the short entry and the long entry. But look, you got 350 of that. Sorry, that's not 850. That's 350. I can't read because it's hidden behind. You lost 350 on that trade. By doing the stop and reverse, you got the money back within 24 hours. And that's the point about these outside bar stop and reverse. They're not always profitable, but they're a damage mitigation technique, and it's vital that you get used to taking those. It's the hardest trade in the world because you've been excited with the down trade, seen a lot of money, now it's coming back, now you're getting disappointed. Crikey, now you got to stop and go long when you wanted to be short. And most people can't take these stop and reverse trades, but you must train yourself to take them, because this is what they do. They're a loss mitigation technique. On the same day, I want to show you how easy this is, folks. These are just some of the Danielcode signals that were posted for Wednesday. And you can see this is a currency trade. We trade a lot of currencies. This is GBP-CHF, which stands for Great British Pound, and CHF is the, excuse me, the Swiss currency. This was a standard DC blue line and T.03 buy signal. The trade program, which I showed you earlier, that page with all the words and numbers, showed you exactly where to enter it and exactly where to put your stop loss. You could have exited at the end of Wednesday if you wanted to, but have a look at this stochastic. It's up, it's roaring up. The 6-day average is turning up. You got 2,394 out of that trade in a little less than 20 hours. These trades took off about 4 or 5 o'clock on the Tuesday night. You'll see I was posting about my Tuesday night. 6 hours before the Fed. This has nothing to do with the Fed. These big moves in currencies happened half a trading day at least before the Fed announcement. These were caused by, according to the Daily Telegraph, the unemployment figures, which of course is also rubbish. But the Danielcode was telling you these moves were a high probability of happening 1 and 2 days before they happen. So here's another one. I'm trying to just get the point across to you people. There's a lot of money here. We've seen 1,600 in the equities. You multiply that by about 3 or 4 with the others. This is Euro-GBP, exactly the same thing. Here's a blue line and T.03 sell. This was elected. That means it became active on the Wednesday. Euro-GBP was posted on Tuesday. In fact, it was posted 2 hours after the close on Monday for execution on Tuesday or Wednesday. So with the Danielcode, you know about these trades days in advance, and there's a pretty easy $1,400. Let's move on. I'm showing you exactly the same thing. Here's GBP-JPY again on Wednesday, $2,300. Posted GBP-JPY was actually posted on after the close on Monday for execution Tuesday or Wednesday. So there's $6,000 dollars in 3 currencies alone, and we trade a lot more than that. Now, this is the story of volatility coming into markets. If you're not trading these markets, by the time you find out there's volatility, it's too late. But here's a $6,000 or $8,000 payday per 1 contract in currencies, about the same in equities. And here's DAX, for those of you that like the German DAX. This is the German equivalent of the S&P. Exactly the same thing, no secrets about it. Blue line and T.03 buy. If you're looking at your chart, round about here, you knew there was going to be a blue line trade. Stochastic oversell, huge divergence. Signal came out, buy it there. It's just gone straight up, $6,775 as at the close today. So we're now up to about $18,000 in 3 days. And here's gold. And this is another one, a little bit the same. We had a sell signal posted for you. It was a T.03, it was a 3 signal, exit first profitable close. It came down here, closed, made you $1,100 by the time. Remember, look, late entry, we entered at the low of the last bar that was not an inside bar. If you were more adventurous and brave, you could have entered underneath the inside bar. I don't, because I know mathematically that's a losing strategy. There will be times you wish you did. But just taking the normal Danielcode entry, $1,100. Look where the stochastic is. Excuse me. It's just crossed over. Then we had here, the next day we had a 3's buy signal, which you entered above this little bar, and being a 3's buy, it means you exited the first profitable close. Now, you're long, that means that you think the market's going up. Look where the stochastic is. The stochastic's turned over. It's opening up. Its jaws are opening up. It's starting to accelerate to the downside. Do you want to hold that trade for another day? I don't. And then, of course, as I've told you so often, particularly you tutorial guys will remember, as soon as every time that a buy or sell signal is elected, the next day there's an automatic reverse signal, because the most common counter trend in futures and currency markets is 1 bar. And this market is actually in a downtrend. From here on, it's in a downtrend. And here you've got 1 bar up. That was your buy signal. You made a bit of money, you made about $300 or $400 at the close. which is where the 3 signals suggest you exit. But remember, 1 bar up, the very next day after an elected Danielcode sell signal, you take the reversal because you expect this to be only 1 bar up, which means it's going to continue its way down. That means you sold it right here the very next day. Didn't look that great at the close, but look what it's given you. Another $4,100 in the last 2 days. So there's another $6,000. So, you know, you're up about $24,000 in the last 3 days trading this Danielcode stuff. Now, admittedly, it was a period of extraordinary volatility in some markets, not all. The gold move was quite normal. Equities were giant and unusual. But that's what trading's about. You spend a lot of your time fighting against small moves and lack of volatility, and then all of a sudden, out of the blue, you get these huge, huge moves, and you'll be very wealthy for Christmas. And that's only one contract, and I haven't shown you the rest of the trade. So, you know, you should just have pocketfuls of money and be truly wealthy trading this stuff. You don't need to know anything about math. You just need to have self-discipline, know the rules. They're all on the website. I do webinars constantly to reinforce these points for you. And you need the self-control to keep going through the tough times and the boring times and the disappointing times, because that's the nature of markets. They do everything they can to get you out of the trade, and just about the time you say, oh, hell, I've had it, that's when the market takes off. And I'm going to show you in subsequent charts some instances of those on shorter time frames. Excuse me, I'm required to show you a statement on compliance, which tells you that trading can be very risky and you can lose money. And that's the reality. So you need to know what you're doing. Okay, let's move away from here, and I'll go back to finding the drawing tool. Here's my normal one, so I can close this for you. We can now move on to some other ideas. What I wanted to show you today was natural gas. You've seen the S&P. This is a very interesting play. This is a natural gas chart, and United States is having an absolute boom in natural gas. Excuse you. Those of you who follow the Danielcode will remember at the beginning of this year, maybe January, February, I was asked by Forex Journal to write an article on what were going to be the big plays of 2013, and this is one of the ones I picked out. And it may not look so dramatic to you now, particularly with this huge, great big spike back here in 2008. I'm going to get rid of that, but just bear in mind where it's gone to. That was about $13.69. So if we look at this market, back in February, I said here, right here, that there's January the 28th, article was published on the 15th of January. I said here, this is going to be one of the markets that's going to be exciting for 2013, and look out for it. And if you just had one contract in here, or even simpler, an options, so you didn't have to worry about looking at it, you made $12,800 per one contract. It's a very, very cheap contract, and options were even cheaper. You could have, had 5 or 10 of these on a very small account. Made a lot of money. And the interesting thing is that US has got these massive, massive reserves of shale gas, which are coming onto production, but it has no export facilities, so all of this gas is consumed domestically, and it's selling in America, as you can see from this chart, at about $4.40. Australia has probably the biggest gas reserves in the world, mainly up in the northwest around Barrow Island and Port Hedland, offshore stuff, and it's selling all the gas it can produce to Japan and China for around $15 to $16 for the same thing per cubic meter. Not meter, it's a cubic something or other. Smedge will tell me in due course, but basically the price is $4 in America and $15 to $16 on the international market. solely because the US has not politically agreed yet that natural gas can be exported. It's basically been a domestic product historically. And they don't have the facilities, the very specialized facilities. The stuff's got to be chilled. It's very dangerous to handle unless it's chilled to about minus 160 degrees, special double-barreled titanium line ships, etc. But, I mean, who for a moment believes that America's going to turn their back on this commercial opportunity? They will find a way to build these facilities, and they'll do them in a lot less than 10 years. They'll get them done. I reckon they'll be up and exporting within 2 years, one way or another. And then you look at the arbitrage play, that it's $4.80, $4.50 in America, $15, $16 on the international market. There is just a fortune in this, not only for the producers, but also for you traders. So this is one I want you to keep an eye on in 2014 and beyond. These two markets, the international market and the U.S. domestic market, are going to reach parity sometime in the next few years, and that's enormous opportunity. Excuse me. The other markets that we're really focusing on are the equities. Here's this chart I showed you earlier of the S&P. I think it's got a decent correction coming. This is the 12-day chart. Now, if it only corrected to the median, which is down at 1597, half the world would be having heart attacks. But that's only a correction. If it went down to the first downside standard deviation, 1521, that's a long way from where this market is now. And if it went down to the bottom, the bottom of the second standard deviation, that's 1435. That's 500 points away, and the market would still technically be in an uptrend on this time frame. Remember, you can't talk about trends in markets without being aware of the time frame, because markets have a number of different trends going, and that is dependent on the time frame. So it's quite possible, in fact it happens all the time, that on a daily chart, for example, your trend is up, excuse me, but on a shorter time frame, your trend could be down. So markets have a number of time frames going all the time. Some of this stuff I show you, this time cycle stuff and this fourth seal, is daunting for those of you who are thinking of getting into trading. I promise you, you don't have to worry about it yet. The money comes from trading the day-to-day signals, and we generate them and put them up for you every day. We've been doing it for a long time. We'll help you in every way we can. The big thing for you people is, if you're not yet trading, for goodness sake, get started. The amount of wealth that is possible to be created from the Danielcode is quite extraordinary, and you know, financial freedom, for me anyway, is nirvana. I don't have very expensive taste. I don't have expensive taste at all, actually. Some people in my family do, but I don't. You know, I mean, but the wonderful thing is not to have to worry about money, and to have enough money put away as security for your family, enable you to do the things you want to do, and for them to have that security. I was a practicing lawyer for almost 30 years. I can't tell you that. I can tell you can't make as much money practicing law as you can from trading. It's that simple, and you don't need the resources. You don't need an office. You don't need a lot of staff unless you get to be a big trader when you need a bookkeeper. You can do this with exactly the tools and equipment you have now. So, you know, I really urge you, my message for 2014, I want to get as many of you people into trading as you can. I see we've got some good old friends here. One of you, Neil, used to trade the Danielcode, now has gone off and found some chick in the Hunter Valley who's filling your head with rubbish, and that's really not what chicks are for, Neil. You know better than that. Get back to trading the Danielcode. Stick to your knitting. Remember, there are days when you're going to be disappointed, times when volatility is not apparent, but the rewards are there, and they do come. And we have a lot of members, most of them with us today, who've been doing this for year and years, and the returns are there. So you guys who aren't trading the Danielcode, greatest gift I can give you is the offer of financial freedom. and this is the way to get you there. Next year, the new thing next year, excuse me, I'm going to endeavor to do a webinar every single Thursday night, which is Friday morning for me. It's about the only day of the week that I don't have to do charts and I have enough time to talk to you. And I'm going to go through the trades of the week every Thursday night with you so that you can see what you did, you can see the right way to have traded it, you can see what you did wrong, you can see the winners and the losers. And I mean, make no mistake, we have losers. And I'm going to pull that down to a shorter time frame just to show you the sorts of things you can expect in markets. So they're the big news items for next year. I think we're in a nice position for a decent correction in the equities, which the rest of the world will misconstrue as a panic, a change of trend, or something else. It's not going to be that. It's just going to be a well and truly overdue correction in an uptrend. To reinforce some of those ideas, I wanted to just take you to the fourth seal. This is the most marvelous thing, and I wanted to show you a few charts of where we are on the longer term stuff to bring you up to date. This is the S&P, and Frank, if you're probably in bed at this time, I know, but welcome to you, my friend, when you get around to seeing this. Frank does these charts for us. This is the fourth seal of the S&P. There's a 6-day chart. Here's a longer-term chart. You can see this market has been hovering right at this very, very important red line, which is the fourth seal line. We have Danielcode time cycles expiring. Are we going to have a Santa Claus rally? Look, we'll have a little one. One of the things for you people who still want to watch markets over Christmas and the New Year, remember that the default seasonal bias for the S&P is up into the new year. So if you can get a decent pullback and correction, don't buy it where it is. Buy just a couple of S&P minis and put them away. Make sure you put your stops on. But you'll find that the vast probability, I think, 19 of the last 22 years, the seasonal bias in the S&P has been up going into the last few days of Christmas and then into New Year. But we're expecting, this is a 24-day chart, this is getting to be pretty serious stuff. There's the 6. This is the longer-term one. We are expecting to get some sort of decent correction in the equities, which are well and truly overdue. Here's gold. I wanted to show you this if you don't already subscribe. You can subscribe to these fourth seal reports and charts. They're quite amazing. Here's the latest fourth seal analysis of gold. You can see that there are time cycles expiring. The market has been at Danielcode support numbers. It's broken through now and had a big move down. As you can see from here, it's tracking down the Danielcode red line. Frank at least thinks that the lows for gold are very, very close. He's gone so far as to say this is the low in the Huey. So very brave, Frank. For all our gold bug friends out there who are hemorrhaging from the backside because they're holding an asset instead of trading it. Of course, if you'd learned to trade gold, you could have made 100 times whatever you've made by owning it. Because for traders, we get paid when the gold price goes up, and we get paid equally when the gold price goes down. And to me, that seems a terribly intelligent way. Hey, my old mate Shift has arrived. Hello, buddy. I'll get to you in a while, old son. But excuse me, very, very nice to see that you're here. Also, H.D. Stevenson, good to see you folks here. The other one that I wanted to show you was DX, because, Stephen, I want to chastise you, Stephen from the Philippines, who was down at Waiheke. Here was Frank's marvelous, and you heard Frank, he gave you a wonderful presentation on the fourth seal, and here was his latest update for DX. And here's the 6-day charts, you can see it, and look what he says down here. Same comment, 24-day chart, major cluster of cycles that started to bite on December the 9th. They should enforce a major bottom in this market. So you should have been ready for the strong rally in DX. And this is a thing that W.D. Gann used to say, and I'd love to talk to you for several hours about W.D. Gann. He was a a legendary stockbroker back in the 30s, 40s, and 50s. I know more about W.D. Gann than any person in the world because I spent 12 years believing that he actually knew what he was talking about. He was a great writer of books and a great promoter. And what he actually did is he taught brokers that you can get more money from your clients by promoting to them. And that last time I was in the CME trading floor in Chicago, which was probably 20 years ago or more, there was this huge picture of W.D. Gann hanging halfway down the stairs, and he's much revered by brokers because they think that he was a great guru trader. He actually wasn't, but he was a very, very clever marketer, and he taught brokers that you can get a lot more money out of your clients by marketing to them, and that's what Gann is really famous for. But he had a bit of wit and wisdom about him. He was a student of a very prominent Freemason in London called Cephariels, his nom de plume. His real name was Dr. William Ord Gold. He's a very, very clever chap, and he was a Theosophilus, shift there's a good word for you, and was into astrology and a lot of other weird things, but very, very clever at it, and I've enjoyed his wit and wisdom over the years. Anyway, moving on. So they're the three. I want to show you those with the fourth. The other thing that Gann said that I liked was use all of your tools all of the time. That means, if you want to be really good at this stuff, you should be looking at your 6-day charts, looking at where the Danielcode trading channels are taking you, looking at your daily signals, looking for those of you who've done tutorials, GMATch, FracZen, double on close. Glennis is raving about it. And also your fourth seal analysis, and then you can use don't forget, the original purpose of FracZen, why I invented it, was to use as a confirm, non-confirm indicator for the Danielcode daily signals. And the idea was that if your daily signal is elected and it's confirmed by FracZen, you give the stop a proper place for it to be, which you know about. And if it is not confirmed, that's the opportunity for you to tighten up your stop and reduce your risk. So there's an example of using, the shorter term tools with the longer term tools to make it all happen. Now, talking about FracZen, any of you who haven't got this, you really, really ought to pay attention. I'm going to show you all the charts, excuse me, every one that our friend Sage created for us. From Wednesday and Thursday's trading. And I want you to note a couple of things. The first thing I want you to note is if you handle this properly, we're now sending you with your text. This is a program where you don't need to look at charts. You don't need to do any analysis. The computers at Danielcode servers do all of that for you, and they create short-term trading signals and send them to you. And those of you who are subscribers will have noticed that we're now sending you a suggested stop loss as well. Do read the post about that on the news page. You can use half of that if you want a smaller stop, but that is basically a 2-bar volatility stop, which will keep you in the trade through the little jiggles, but take you out earlier than some of the other systems. So it's just a suggestion. We get asked all the time, what stop loss should I use? What target should I use? I've written about that. That's on the front page, the home page, at www.thedanielcode.com. And I'm not sure whether Sage here, I don't think she's used any stops. But I want you to look at these charts. I'm going to talk to you about them very, very briefly as we go through, because I'm trying to train your eye as to what you can expect. One of the things about markets, particularly when you start, is you get shocked. You have a couple of losers and oh my goodness, and you get shocked. Don't get shocked. Losses are a natural part of trading. And I'm just going to run through these very quickly with some comments that I want you to take on board. This is FracZen this week. This chart here, this is a currency chart which we're starting with. This is Aussie USD, winning trade of 100, winning trade of 330, losing trade of $20. So there was an easy 400 odd bucks for you. Here's the next one. This is everyone she's prepared, folks. I'm not selecting these. I want you to see it all, warts and all. Euro-JPY, made 150, lost 190, you're 40 bucks down. Here's the next one. This is GBP-USD. My eyes are so bad I can barely see these. I hope you can. Lost 700, lost 700. Look, there's 1,400. You've lost 1,500. You're about ready to jump off the gap. And then immediately, what's it do? It gives you back 1,500. I won't say you can't get burnt by this trading, but boy, you've got to be a real idiot. Look at this. You lost 370. You got that back straight away, almost all of it, and then you got $2,500 straight into your pocket. That was GBP-JPY. Moving on, I'm just showing them to you exactly as Sage sent them to me this morning, Sage, for which I thank you. I hope everyone else thanks you. Doing an enormous amount of work for us. This is USD Canadian dollar. Lose 170, lose 500, get 400 back. It's not that bad. Here's USD JPY. Make 400, lose 400, make 300. Then you get to, this is, we must now be into futures. This is copper, 350 bucks. Now, have a look at this. This is oil. Make 80, and then look at these losers. Lose 1,000, lose 200. Why? This contract was in rollover. Okay, this contract rolled over from the old contract to the new contract on the 057 chart. That's Trade Navigator code for a chart that just adds the new contract straight onto the old contract. But of course, it hasn't accounted for the premium or the discount. Contangos and backwardations, as we say, shift, which your good friend Professor Fakiti got so confused over. So at rollover, this stuff gets into a mess. Okay, so make sure you're out of the old contract the day before rollover. This is short-term stuff. You only need to allow a day either side, and then it needs a day in the new contract to regain its count. So actually, these aren't losses. If you had a look at the old contract, it actually made money. But this is the rollover. This little R down here, just above where my arrow is, little R in a triangle, a diamond, tells you that was contract rollover. And these charts get into a mess at contract rollover. Make sure you are out of them before, and then give them a day's running to get back in. This is GX. This is the DAX, 2,225. Peter Andrews, I know you love this market. Lost 1,700. Look, gives you straight back to another couple of thousand on top, 2,900. Okay, this one here has slipped away from where I had it. And this is the US dollar index. Same thing. What happened in here? Rollover. Okay, I'm showing you this. Don't be in these markets in FracZen the day of rollover, because they lose their count, and it needs one trading day to regain the count. Here's GC. So this is gold, 130 up, lost 600, lost 300. There it's lost 900. You're panicking now. Gave you back 300, gave you back 500, and then gave you $2,000. So can you see here? Don't be frightened of these losses. This thing is quite extraordinary. And don't give up when you have the losses, because all it's doing is getting rid of the rest of the baggage, and it's about to give you a big reward. Here's the Russell. This was on rollover, but this starts from after rollover. Lost 500, gave you 1,400. Here's this is silver. I'll have to get a new set of glasses very shortly. Ups and downs, ups and downs. Basically, the losses are $1,370. I'd say $1,450. Look at the winners, $3,000. And this. I want you to see this. I'm trying to prepare you for what you're going to see when you start trading FracZen. Now, with FracZen, of course, you can use much, much smaller accounts. You don't need big stops. That's the whole thing about FracZen. Because we're trading on shorter time frames, you can trade FracZen with very small accounts. So that's the way to get going, folks. Okay, I wanted to show you all of that. We've had an hour already. I'm trying to train your eye to see the good and the bad. And if you've just gone through all of those charts, that's the whole of the trading. I think probably some Tuesday and at Wednesday, Thursday, you made a hell of a lot of money. don't worry about the losses. Use your stops. If you have some losses, it just means it's getting rid of the baggage, getting ready to give you a big blast. Okay, so they're the main things I wanted to show you for this webinar, folks. So I say next year, webinar every Thursday. Let's see if we can get you folks trading. Those of you who have been trading with the Danielcode who no longer are, for goodness sakes, get back in the saddle. If you've got the time now or for whatever reason stopped your trading, get back to it. The money that we've been making, truly, I don't talk about money. I'm a very conservative person, and I'm an older person with different values. But the only way to get the message through to you folks is that we are making a stack of money, and you can be too. And all you've got to do is have the will to do it. Get on, get yourself joined up. We'll give you the templates for these charts, the Danielcode studies, the stochastics, the moving averages, the CCIs, all the things you need. And we'll help you in every way we can. Okay, let me see what the conversations have been all about. Mr. H.D. Stevenson, first of the only part of my real estate trial. Oh, good on you, mate. First next year, little luck. Looking to start the earning. Good. Get onto it. That's H.D. Stevenson. Here's my very good friend, Professor Antal E. Fakiti once told me one contract of natural gas equals 10,000 million BTUs. Yeah, and he doesn't like backwardations either, eh? Set time on Thursday. Neil, it's going to be the same time as now. This is about the only time of the day I can do it. Now, that may move around a little bit with daylight saving, plus or minus 1 hour. Brisbane doesn't. Queensland, believe it or not, doesn't have daylight saving, which is just an absolute bloody tragedy because it's just so beautiful here in the evenings. But they don't have daylight saving because, as you know, it's a huge state, and even without daylight saving, places like Roma and out in the Midwest, it doesn't get dark till 9:30, 10 o'clock anyway. So, just too much of a burden on those folks to have an extra hour of daylight. They might as well live in Sweden with Bo, which wouldn't be half bad, Bo. I had some sill last night for dinner. My wife went to IKEA while I was away and came home with some sill and some, of the caviar and the elderflower drink and the lingonberry, I think it's called. All the good makings of the Swedish food. My wife's Swedish, folks, if you wonder why I'm rambling, and so's my friend Bo. And we had a big Swedish meal last night. Boy, I got to tell you, it was fantastic, and don't forget the schnapps to go with it. Edward G, Pro available. Also has the T.03 Plus system available on Auto Trade. Edward, it's going to be, I had a most interesting conversation at Waiheke Island with Tim Birch, who's the chief programmer of Trade Navigator, and he's also a director of the company. And we've been waiting on more stuff, more programming to go into the GMAG and Genie Pro systems for 17 months from Trade Navigator. And they just haven't been able to get it done, I think partly because they didn't understand it. Shift, thank you for your input. Tim said to me today that he got to understand GMAG Pro a lot from his talks with you. And Edward, in fact, Tim is, when he gets back from, he's just got back to America today from Waiheke. He had a week in Australia. He'll be back in the office in the new year, and he's going to work to complete this programming of Genie and GMAG Pro, which will make it a lot better, very considerably better. And I've said that if necessary, either Shift or myself will go over to America and sit with him for a week to make sure we get this programming spot on, because it's a system with more potential than anything I have ever seen. We had a large number of people at the tutorial who trade GMAG manually, and they've been telling us the sorts of returns they've been getting, and the auto trade program is not matching that because the programming of it is not completed, which Lois, who I know is here, might answer your question that I haven't answered, Lois. So let's see what happens in the new year. We'll be releasing a new version. I know Edward's been doing very well with GMAG Pro anyway, but we're going to make it better. We're going to turbocharge it. and Shift and I, or one of us, will be going over to America to sit with Trade Navigator and talk them through it all. So there we are, Steve. Equity, stop and reverse, got all that. There's Bo. He's happy that I had a big feed of SIL last night, SIL and Tartis. Very nice. And that's about it for us, folks. Thank you very much for your attention. I don't want this webinar to go too long. I know a lot of you are very busy with the weekend before Christmas. So from my family and I wish you all the very, very best for Christmas and for the holiday period. Christmas is not a particularly big deal in America, but it is the annual holiday down here, down under, and we'll be closed from this weekend. The website will be closed until trading resumes in January. But Terry, the faithful, my friend who runs the website for us and answers your questions, he'll be on duty. He's got 2 young children, very young, one of them, so he'll be staying home. And he'll be available to deal with your emails and questions and anything else you need. So for those of you in the cold climate, let me tell you, my swimming pool has just been put in. It's not completed, but it does have water in it, and it's clean and lovely. And I'm about to take off from here, Shift, and have several margaritas in your honor. I mean, if you guys, you know what I'm thinking about, you should have seen Shift at Waiheke. His performance was world-class in all aspects, both his teaching, the help he gave to all our new members, and also his emceeing activities after dark. Absolutely wonderful. So very, very happy holiday to you all, folks, and do please, I beg of you, consider girding yourselves and making the transition to being big-time traders next year. We have the tools. We're willing to help you. If you're dedicated to poverty, don't make the change. If you want to really make some money, learn to trade the Danielcode way. Have a great holiday, folks, and I'll look forward to seeing you all in the new year. Bye-bye. Good night, Mo.